All right, here we go. The 3-minute market update coming to you live the day after the big decision from the Fed. So we're going to bang through all this real quick in 3 minutes. So the Federal Reserve made the decision yesterday that they were going to drop their rates a half point. Everybody thought it was going to be a quarter point. Turns out it was a half point. What does that mean? What it means is that they see the economy needs a little bit more of a kick in the pants. They're going to drop the rates a little bit to try and get the economy, kind of give it a smoother landing. They don't want to cause a big recession or anything like that. Okay, so that's kind of what they did. Again, it's a 3-minute market update, so this is going to be a quick update. What does that mean if you're buying a house? Well, mortgage rates, the mortgage-backed securities and the bonds and everything that drive mortgage rates, they kind of knew that this was going to happen. Now, there was going to be either a half yesterday and then a quarter in November, or a quarter yesterday, half in November. But the mortgage rates know that there's going to be a lot of big drops coming over the next couple of months and into next year. There's going to be some serious drops from the Feds. They're going to be cutting that rate. Mortgage rates already know that. So for that reason, mortgage rates really didn't overwhelmingly respond. I kind of thought, my knee-jerk reaction yesterday was like, wow, half point. I don't think anybody was thinking half point yesterday. I don't want to say anybody. I'd say I think 2/3 of people thought it was going to be a quarter. A third thought it was going to be a half. So I think most people a little surprised that they went for the half point drop. But mortgage rates really didn't care. In all honesty, mortgage rates, they went up yesterday and they're up a little bit today based on some of the data that's coming in from other parts of the economy. So while the Feds do what they do, mortgage rates are going to do what they do too. But we got to look at what's happened to the mortgage rates on the whole. Since spring, the mortgage rates have gone from what was basically 7.5% in the spring. Now we're flirting with 6% flat. We're like 6.1, 6.2% right now. That's going to, continue going down as we head through the rest of the year and in the beginning part of next year. If you ask me what's going to happen, I think that we end up somewhere just below 6 right at the end of the year. Maybe we're in the upper 5s to mid 5s by spring to summer of next year. I think next year's going to be a very busy year if you're looking to buy. So this is what we're calling for everybody. If you are looking to buy, I would do it now. A lot of people are quiet right now, watching for the election, waiting for rates to go even lower. I would grab a house now because the traffic's very low right now. All right, we're in September. Believe it or not, it's very low. Not a whole lot of people looking at houses. You can get a really good deal right now. Okay, if you're selling, it depends if you're looking to sell to buy or looking to sell just to sell. We'll talk about that more and deeper in later conversations because, man, time's almost up. I think we only got about 10 seconds left. But there you go. There's your 3-minute update. Feds dropped their rate and mortgage rates slowly dropping. If you want to buy, let's rock and roll.